Hello there, welcome to Trade of the Week. This is the time when we get to analyse and scrutinise and decide if a trade was successful or not. So let's go to the expert, he knows more than me, it's Joshua Mahony. You went short on dollar yen. How did that work out? What exactly happened on that chart?
Well, the interesting thing about this is we didn't necessarily get the entry immediately, and it did sell off initially, which is a continuation of the sell-off that we saw last week, but this week it's actually been rallying and rallying into what would have been my entry point. So actually it's a sort of belated trade of the week, so to speak. We would have only just got the entry around about, I think, yesterday that we hit it. So we can take a look at exactly what's happened here. So this is the daily time frame to see what we're talking about here. We had this sideways continuation pattern, then we finally saw that breakdown, and then we've been seeing this rally coming back up. Now, I believe the 8th was a Friday, so we didn't necessarily get to that level that we were looking for. We're talking about either the 61.8 or the 76.4, and actually on the 1 hour chart I believe I've got my fib, and here we go. So levels we were looking out for were 109.49 or 109.93. I said if it hit 109.93 that would be particularly good because of the fact you had previous resistance and support. Didn't necessarily hit that, but we saw this 61.8 providing resistance. It just about moved above there, but now it's broken back down below, and you can see crucially we're now breaking to new lows. 108.89 is the support level that's currently being broken. So it is somewhat of a belated trade of the week, but finally we would have got our entry, and I'll be quite happy to be short this just for a move down to 107.63, and for it to not break back above 110.66, which is that previous sort of big level that got broken, where we saw this selling off quite heavily. So I do think that we're going to see some weakness coming into the beginning of the next week. Okay, does that mean you're going to stick with it then? It does, but it doesn't necessarily mean that I've shirked the responsibility of doing a new one this week. So we've got something else to talk about as well. So the one I wanted to talk about this week is the Australian dollar against the New Zealand dollar, and the Aussie has been doing particularly well recently because of the fact that China's starting to look a little bit better. The Aussie economy itself is doing a lot better, and we've seen this sort of breakout. If I take it out to the weekly time frame, this is going to give you a good idea of what we're looking at here. We've got this symmetrical triangle in play, previous resistance trend line coming down. Now we've finally broken out of that, and then we came back to that level, found support on it 3 times, and there is a very good chance, in my opinion, that now that we're creating higher highs, higher lows, we've broken this trend line, we've found support on this trend line, I think we've got a good chance that we're actually going to see this really start to ramp up, and we're going to see the Aussie really start to fly against the Kiwi. Now, if we look in the short-term time frame, this is where it gets quite interesting. You can see that we got that breakout, but we've seen this big pullback, and big pullback, in my mind, is a good thing for me, because ultimately it would give me a better risk to reward. I don't necessarily like taking trades up here because you don't know when it's going to pull back. But we're seeing this retracement at the moment, and essentially it gives you a better chance to get in. Now you can see this is essentially the move, 110.35 up to 112.41. That was a massive rally that we saw, and therefore we're looking for Fibonacci retracements of that move. Now the 50% essentially is a 1-for-1, and that means that I think that it's going to go back up to 112.41 as opposed to 110.35. Now, I would say that I'd be very confident that that is going to happen. If we could get it at the 61.8, that would be even better. But certainly, I think in my mind that we're actually going to start to see this ramp up. And you can see we will get this sort of trend line support coming into play once more as well. So this is certainly, in my mind, something that, yes, we're seeing a big move towards the downside right now. I don't think it's going to last very long, and I think we're going to quite quickly ramp up back towards the upside, and we should see some decent gains in Aussie dollar. So I think your initial target is 112.41, and if we're looking at some sort of stop, you'd be looking below this 110.35, and that is pretty substantial stop below there. Okay, so that's being safe as well. That is being safe, yeah, and quite honestly, if I was going to take a trade, I generally would wait for 76.4s or 61.8s, because that gives me a better risk to reward profile. So just for the avoidance of what happened last week, where we didn't necessarily get into the trade until it actually came around, I was saying we could take a 1-for-1 and hit it at the 50 fib. But ultimately, I personally would prefer to actually take it on a deeper pullback, and hopefully this continues to pull back so we can get a better risk to reward profile for that trade.
And obviously we were talking earlier, there's loads of Australian economic data coming out next week as well, so that will all play into that. I like your confidence, great stuff. We'll find out next week if we're going to go and have a party and have champagne. We will find out. But that is our trade of the week. So good luck with your trading as well. Thanks very much for watching and have a fantastic weekend.